Thank you to Africa Investor for putting such a good session together so that we could have an opportunity to reflect on where the opportunities are so that we are able to deploy capital across the continent. Just to give a brief background about who the GPF is. The GPF is the Government Employees Pension Fund of South Africa. In terms of assets, we're sitting at about 1.2 trillion rands, which is roughly about 120 billion. And really, I think when one talks about mobilizing capital to pursue opportunities on the continent, I think we need to put that in context of what is the total capital available in Africa relative to capital that is sitting elsewhere. And when you look at the capital that is sitting on the continent, the total pension assets on the African continent are sitting roughly at about 250 billion. And you need to put that into context of total assets pool that is outside Africa, which is 28 trillion. So I think, relatively speaking, we're quite small when you look at what is happening out there in terms of total assets. So the question we need to ask is to say, in mobilizing African capital, what is it that we're going to do that will catalyze and make sure that we are able to attract a significant percentage of the 28 trillion US dollars that is sitting outside the African continent? And I think when you look at the economic conditions as they sit, you would notice that capital sitting elsewhere in let's say Europe and the US, it's looking for a new home because there isn't really growth in those markets. And in addition, most of the schemes, like in the US, are underfunded because what has happened to the bond yields, they've pushed the values of the liabilities or the actual liabilities very high, while assets have failed to perform in line with the liabilities. So in that scenario, if you were to be a valuator of the fund or be an actuary of the fund, you only have two options available. It's either you're going to recommend that the sponsor of the scheme has to contribute more towards the pension scheme, which is very unlikely given the challenges that are facing many companies, including governments in the world. The second option is to request that they pursue a more aggressive investment strategy to seek for new growth opportunities. Now, if you look at where growth is going to come from over the next decade or two, that growth is going to come from Africa. So we are in a very unique position to position the continent very well in terms of attracting capital from elsewhere. So mobilizing domestic capital, I think, plays a very very important step in terms of creating additional confidence about the markets and about the systems that exist on the continent in terms of protecting investors and also pursuing opportunities. So in this regard, as the GPF, we've committed, and unfortunately I'm not in the same boat as Mark here, who can invest up to 30% on the continent. GPF has a separate regulation. We are regulated under the GEP law. And on the basis of that, every time one crafts an investment strategy, we have to do that in consultation with the Minister of Finance on behalf of government. And so far, he has allowed us to invest 5% of the total capital on the continent. And I don't think 5% is enough, but I think it's a good step in the right direction, given the amount of money that is involved. So, I mean, that is roughly, 5% of the GPF, it's roughly about 5 billion US dollars that we need to invest on the continent. Currently, with the only exposure that we have, it's very minimal in the context of the overall portfolio. We've got an exposure through the Pan-African Infrastructure Development Fund, and I think we've been doing quite a good of things on the continent in terms of opportunities, and we've been generating excellent investment returns. We've also bought a significant stake in EcoBank so that we've got a platform that will give us access to 34 countries on the continent so that we are able to pursue opportunities. So we are mindful that the confidence we are injecting in the system, it's very important for institutions to be able to attract even additional capital from elsewhere. But obviously, as Mark reflected, pension funds, by their own nature, they are limited in terms of knowledge and understanding. And one of the major barriers in terms of getting capital into these opportunities, it's really about knowledge. How do we get the trustees to derive comfort firstly about the asset class and about the, the perceived political risk and any other risk that might exist on the continent. And then secondly, how do we ensure that we are able to create liquidity within the opportunities that exist, especially for defined contribution funds, where they need to be able to liquidate investments as and when required, so that they're able to pay the monies across to the members. And I think thirdly, it's about the pricing, because I think I'm in a more unique position because we are a defined benefit scheme. So the issue of pricing, one can estimate the value of those investments maybe once a year or twice a year. But I'm assuming that for my colleagues sitting in a defined contribution scheme, where members are coming in and out of the fund, they would like to know what is the fair value of those investments, at least on a monthly basis. And unfortunately, most of those investments are unlisted. So we need to find methodologies in which we can use to estimate the value of those investments in between financial year ends. So those type of things, I think, are things that needs to be addressed in order to be able to attract capital from other players within the ecosystem.
Doing business in Africa, you can't afford to be without Africa Investor.